I'm Sean Haney, and this is Realag on the Weekend. Let's get real and get connected with the week that was in Canadian agriculture. Realag on the Weekend starts now. Welcome to Realag on the Weekend here on 650 CKOM and 980 CJME. I'm your host, Sean Haney of RealAgriculture.com. Hope you had yourself a great week. Saw that Saskatchewan moisture map. It's looking pretty good. Looking a lot better than it did, say, 60 days ago for sure compared to last year. Just need that temperature to just turn up a little bit. We'll get these crops really, really rocking and grow past any sort of a threat of flea beetles. That's really what we need at this point, for sure. We definitely have some moisture to get us off to a good start, but we're not out of the woods. The year is still young, as they say. You know, one of the things to watch out for next week on realagriculture.com, we're going to have an interview with Dr. James Tansey of the government of Saskatchewan. And Dr. Tansey is going to talk about what's going on with grasshoppers. Hearing rumors of significant populations in the southern end of the province. You know, I remember talking to Dr. Tansey back in probably about February-ish, and he talked about how a cool, wet spring is something you need to break the cycle of grasshoppers. Well, was it cool and wet enough this spring to break the cycle? I'm not sure, so I'm looking forward to hearing what he has to say next week on realagriculture.com. Well, today on the program, we're going to hear from Ann Wasco, the Gateway Livestock Exchange, get a bit of a beef market update, so to speak. We've got a strike at the Cargill plant in Guelph. We've got issues with CBSA workers and a strike there. So there's lots happening in the cattle markets on top of all the price things that we're going to talk about here today on the show. We got Bethany Wyatt from BSF Canada to talk about Group 11 resistance. Important topic. And we're going to finish up the back end of the show talking to Randolph Glanville of Grain Fox. We're going to hear what's going on in the wheat and canola markets. Interesting week in the markets for sure. We had a crop progress report out of the United States. USDA says that 75% of the U.S. corn crop is rated good to excellent. Only 4% poor to very poor. It's maybe the best first rating, I think, in like 20 years, or one of the best in the last 20 years. So U.S. corn crop off to a fantastic start. Usually that's not a good indication for the markets, but we're going to focus on wheat and canola and kind of compare it to what's happening in the corn markets. If you have any feedback on today's show, you can send me an email, shaney@realagriculture.com. You can also call the Realag feedback line, 855-776-6147. I had a chance to catch up with Ann Wasco of the Gateway Livestock Exchange to find out what's happened this week in the cattle markets. Here's that discussion.
Well, it's kind of been one of them quiet starts to June, I'll tell you that, Sean. Even in the U.S., we've got pretty quiet business so far. There was some bids in the South, in Texas and Kansas, around 185, but most of that's been passed. That would have been a buck lower had it been made into sale. So really not much to tell you about in the South. The North, there's been a wee bit of trade in Iowa at 188. That's a couple bucks lower than last week. And again, not much in volume at all. And a little bit of dress trade at 302 delivered, which would be steady. So kind of just picking and finding some markets. I suspect by the time the week finishes, remember this is our first full week after the Memorial Day week. So, you know, maybe just a little slow to get going, but there could still be business by the close of the week. But at the time when we're speaking, it's certainly still been very quiet. We know we had that smaller cutout through the holiday week last week, and this week's kill has continued in the U.S. to be, you know, not as aggressive as, say, a normal post-Memorial Day week. And so that means that we've got the cutout that climbs a little bit more. You know, smaller slaughter has certainly helped support this cutout. So the choice was up $2 at the end of this week compared to last week. That puts it at 316. And the select now is about $15 back, Sean. So that's a little closer to what kind of, quote, a normal spread would be for this time of the year. If you recall, really right up until May, we saw a really narrow choice select spread as, you know, more products were being, out of that select cutout, were being pegged to be ground and part of that lean trim market that's been, you know, record high. So that's kind of how the wholesale market's going to close out, a bit higher, but mostly because of a smaller kill. Now, bringing that Fed market back to Alberta, trade this week, 440 delivered dressed. That is steady to $2 higher. We haven't seen the Canfax average yet, but it will mean another new all-time high for the Canfax average.
Wow.
And it also means that our spot basis, we moved to a premium level last week, and that means this week we're going to be anywhere from 3 to 5 over, depending on when and where the U.S. market ends up trading at. But again, a very strong market vis-a-vis the U.S. And this Canadian dollar for one day it's under 73 and the next day it's just over. But the bottom line, it really hasn't traded far from 73, and that means it's been pretty supportive to this whole cattle market situation as well. So
Yeah,
that's the update.
yeah, and that you're mentioning the time we were having this discussion. We're having this discussion on Thursday night based on crazy travel schedules for the both of us. So, um, I think one of the things that I've been, you mentioned the currency and the exchange of the Canadian dollar, and we saw this week the Bank of Canada lower by 25 basis points. Now we haven't seen the Fed drop yet, but we know the Fed's going to drop rates at some point here. The expectation is in 2024. A lot of people are thinking it's going to happen in September. So it's almost like it's that's kind of priced in. We're not we theory says that we should see that Canadian dollar drop, but it maybe hasn't launched lower. It did, it did temporarily. Like when the announcement first came out, it dropped to I think it's like 72.25 or something like that, but quickly shot back up
Mm-hmm.
to over 73. So definitely something that exporters, cattle, pork, and others are watching. What about? Did you mention basis?
Yep. So a strong basis again, picking up to probably, like I say, $3 to $5 over the U.S. market when the dust
Yes,
settles. Yeah, yeah. So
yeah.
another strong move. And June of all of the months of the year, Sean, June is typically the strongest basis month for Alberta cattle feeders. So we're starting off in great shape, especially if it gets better as we go through the month.
Okay, so what do we need to know about live export data for April?
Well, StatsCan did come out with their April data, and I know that sounds like it's really, really old, but that's our most current numbers. But I did want to share with you, and we knew this, we talked about this last month when we got this data. Fed cattle exports really picked up. This would be in the month of April. So a lot of this business would have even potentially been done in March. And remember where our basis was in March, Sean? Minus 20,
That's
minus
right.
25,
Yeah.
right? So of course there was a lot of business being done with US packers, and we did see the final data. We knew this was going to happen, but here's the final data. Fed cattle exports in the month of April were up 51% from last year. That makes year-to-date numbers. So the first 4 months of this year, we're up 30% in our fat cattle exports. But everything was up, Sean. We had cow exports up 45% in April. Year to date, it's still down 2, but it just shows you, how busy things got in April in terms of cattle moving south. And even on the feeder side, not big numbers, but they were still even up 7% from April of 2023. So it was a busy month, cattle moving south, and certainly that big fat cattle export would have been a key turnaround time in terms of this basis improvement.
Yeah. The trucking industry doing well with those kind of
Yep.
numbers. And let's retail meat prices for April. The Stats can release those as well.
Yeah, it was a busy week for StatsCan with some beef news. This one again, we came into the second quarter. That's our grilling season, and guess what? Beef prices were up at the counter. So Canadians, this is the average across Canada. Retail beef prices were up 11% in April versus last year in April. Pork prices, on the other hand, were unchanged from a year ago. Chicken prices were actually down 4%.
Hmm.
So if it felt like you were seeing a little bit of that sting at the counter in April, then that certainly was materialized and showed up in this StatsCan data that shows these beef prices were pretty stout for the month.
The other thing that a lot of people in Ontario are talking about is the fact we've got the Cargill plant just outside of Guelph, and the strike that's been happening there this week. That anytime there's a strike with the processor, it does create some concern.
Yeah, the processing facility for sure. And so again, when you've got, and you've covered this story, but when you've got the largest plant in the province not operating, certainly that really is putting pressure on those that are feeding cattle in the east, and that I guess we'll see how things play out. It's from where I sit, certainly been quiet. I see it in the data. Obviously, the kill, the week before last was considerably smaller with just the small plants basically operating. So all eyes on that one, but certainly something that we don't need any of these extra issues in terms of getting cattle to market, especially, Ontario producers were still getting, cleaned up with some of that winter supply. Western producers had kind of moved into their calf feds and were current, but, I think Ontario cattle feeders still needed to get cleaned up, and that's only going to, increase in its intensity as we move forward.
That was Ann Wasco of the Gateway Livestock Exchange. We're going to be right back here on Realag on the weekend with a conversation with Bethany Wyatt of BSF Canada, talking about Group 11 resistance. You're listening to Realag on the weekend on 650 CKOM and 980 CJME.
If you're involved in the agriculture industry, it's important to stay informed on all the latest issues affecting your business. At RealAgriculture.com, we offer fast, reliable news, information, and insights to help you keep on top of all of the latest in Canadian agriculture. Visit RealAgriculture.com and sign up for our free daily newsletter covering everything from news, agronomy, animal agriculture, and much more. Visit RealAgriculture.com/subscribe today.
There's a reason we call it the Corn School. Videos on everything from planter setup to weed control, field trial results, and the latest yield strategies. The Corn School on realagriculture.com has the information and advice you need to help you succeed. Brought to you by Pride Seeds and BASF. Corn School episodes are available at cornschool.com, from realagriculture.com, or as a podcast in your favorite podcast app. Check out the latest Corn School episode today.
On a recent Pulse School episode, we talked about Group 11 resistance, and we heard from Bethany Wyatt of BSF Canada. If you want to find out more about the Pulse School, go to pulseschool.com, which is brought to you by BSF Canada.
So when it comes to Group 11 resistance and pulses on the prairies, I think it's definitely a lot bigger issue than it's first realized. I think a lot of people have gained awareness over the last number of years, just with us or BSF discovering the first cases of Group 11 resistant anthracnose in lentils. Since then, we've continued to sample, and we can confidently say that that is across the lentil growing region. But Group 11 resistance in pulses is not new, kind of dating back to the early mid-2000s, starting with Group 11 resistant ascochyta in chickpeas, which today it's quite well known that if you have ascochyta in chickpeas, it's going to be Group 11 resistant. And then also Mycostrella in peas. That was first confirmed as resistant, or first cases as resistant by Bruce Gosson back in 2008. I would say it's not as prevalent as ascochyta and anthracnose, but it definitely is there. I think also just the last number of years being so dry, there just hasn't been a lot of disease in general. But I think once we get a little bit of a wetter year and heavier disease pressure, it's definitely going to be more evident. But it's there, and it's been there, and will continue to be.
Unfortunately so. Okay, so let's talk about some of the warning signs or symptoms that might indicate that you have Group 11 resistance on your farm.
Yeah, so I think we can draw some similarities to herbicide resistance, which we can when it comes to fungicide resistance in general. But as with herbicide resistance, we kind of first realize that we might have a bit of an issue or have a hunch if you have uncontrolled weeds. You kind of have those patches of weeds where you notice there is some uncontrolled. When it comes to fungicide resistance, it's similar. I mean, realistically, it's going to come down to, you're probably going to notice that fungicides that may have been effective in the past just aren't working as good as they used to. Fungicides can be a little bit tougher though, because the diseases are quite patchy in nature. So they're kind of just patchy in the field. Conditions can vary. I mean, if you get continued moisture, humidity, and the fact that they're polycyclic diseases, these early season diseases, the ones that we are worried about resistance, they can have multiple cycles per year. So it's not as black and white, I guess, as with herbicide resistance, but usually the first indicator is just, again, you're going to notice that you may not be getting quite the level of control that you have come to know with some fungicides that you've used in the past.
Do we have some math or a handle on the impact here when it comes to crop yield and quality, or is that also a little bit more elusive, so to speak?
So that's one of the things that even at BSF, I mean, we're still, ever since the discovery of especially group 11 resistant anthracnose in lentils, really starting to get more of a handle on and try and get a bit better of a number. I think it's, again, pretty tough to say, just the nature of diseases, that they can be polycyclic. A fungicide is only going to last, 10 to 14 days, depending on conditions, and sometimes even less. And then again, it's going to just depend on the pressure. And again, how many disease cycles per year you get of these diseases. Again, hard not to mention, the last few years being quite dry. So we're just not having that disease pressure. But realistically, we know that a lot of these early season pulse diseases that we do see group 11 resistance in can be quite devastating and lead to very high yield losses, up to 50%, anthracnose with lentils. So if you have group 11 resistance in a almost completely or near completely resistant population, and if you have high disease pressure, it's not being controlled, then it definitely could be reaching as high as that.
Yeah, and the struggle in pulse crops is, like, you think about chickpeas and ascochyta, multiple spraying inside of one season, right? So this sort of the same issue that it'll be even more so when you look at horticulture, for sure. But if you look at broadacre crops, pulses is one where we have multiple applications of fungicide. Now, strategies. Now, we were comparing to the herbicide resistance earlier. We talk there a lot about herbicide layering. We talk about multiple modes of action. With fungicides, what do we do? What are the successful strategies that we should be paying attention to?
Yeah, no, that's a great question, and definitely can draw some similarities from herbicide resistance and dealing with that. So I think the absolute biggest one when it comes to dealing with fungicide resistance is kind of same with herbicide resistance, just general good agronomy, crop rotation. Obviously, the difference between diseases and fungicide resistance is that you need that crop as the host in order for that selection pressure to be there. Whereas weeds, they're kind of going to be there every year. So the selection pressure is likely going to be increased. If you have a good rotation, 1 in 3 or even 1 in 4 years, understand economics have to come into play. But if you have that wider or that longer crop rotation, that alone is going to help break down that inoculum. These species or pathogens can only survive for so many years. So crop rotation is definitely going to be the biggest start, because that alone is going to decrease your selection pressure. Then when it comes to a year that you have that crop, applying a fungicide, making sure that you are not applying multiple applications of the same group. So same thing, rotating, including multiple modes of action, not relying on just a single mode of action, making sure that you are applying a product that at least has two or more modes of action. Understanding in fungicides, we are a lot more limited. We really only have the group 3, 7s, and 11s as kind of our main ones. So also just being responsible with that, understanding what groups are in your products, not cutting rates, applying them preventatively to make sure that we are getting good control, and following up with additional applications if the environmental conditions do persist.
That was Bethany Wyatt of BSF Canada talking about Group 11 resistance. Encourage you to go to pulseschool.com and you can hear the entire conversation between myself and Bethany. You can also find Pulse School episodes by going to the Real Agriculture YouTube channel. We'll be right back here on Real Ag on the Weekend. We're going to talk about wheat and canola markets with Ranulph Glanville of Grain Fox here on 980 CGME and 650 CKOM. Get all the information you need to keep your pulse crop healthy and profitable with the Pulse School on RealAgriculture.com. The Pulse School is a free YouTube video series covering agronomy, research, and more across a host of different pulse crops. It's also available as an audio podcast wherever you download or stream your favorite podcast. Check us out on YouTube or visit RealAgriculture.com. The Pulse School, brought to you by BSF Canada.
The Canola School on RealAgriculture.com is your one-stop shop for everything a canola grower needs. Check out our free video series on YouTube for all the latest in canola agronomy, research, marketing, and more. Don't have time to watch? Download the podcast version of the Canola School on RealAgriculture.com or anywhere you download your podcasts. Stay on top of all things canola with the Canola School on RealAgriculture.com, brought to you by BASF and Invigor Hybrid Canola.
This week on the Realag Radio podcast, I had a chance to talk in a market segment with Ranulph Glanville of Grain Fox. And we had talked about the corn and soybean market. And if you are interested in that conversation, I encourage you to go to realagriculture.com or download the Realag Radio podcast wherever you get your podcasts. We're going to focus on the portion of the conversation that pertains to wheat and canola here today on Realag on the weekend. And wheat has felt much more bullish, quite frankly, than some of the other commodities. Should we feel comfortable about that? Is that a good thing? Or do we want some of those other commodities, those mainstream commodities like corn, for example, to be leading the charge higher? That was one of the things I talked to Ranulph, that and a whole lot more. Here's the conversation. Okay, Ranulph, I want to move to, and I kind of joked, this is where the action is. It's wheat. Should that feel a little bit uncomfortable?
Well, a little bit. There's, as an analyst, you don't like too much company, and you like to be in there saying, oh, I like natural gas because it's going to be higher 8 months from now. And the wheat market's one where you sit there and you look at what's happened over the last 6 or 8 weeks and you say, boy, there's a lot of company on the bullish side now. So yes, yeah. It does start to make me a bit nervous.
Yeah. Is wheat in a better fundamental position right now than corn?
I think the short answer is yes. If we step back and we look at the global situation, we have the ending stocks of most of the major exporting nations. This would be Canada, Australia, the United States, Russia combined. When you lump them all together and think about what are we expecting in the year ahead, there is some tightening there. So all else equal, that tends to create a bit of buoyancy, lots of unknowns on the demand side. But it looks like some of the crops, particularly in Russia, which has been a real engine of exports onto the world market over the past couple of years, it looks like that engine is slowing down.
How big is the problem in Russia? Because, when I read different reports, I seem to get like a different sense. And and obviously, too, I'm a little bit, it is Russia. So you're like sort of like China. You're a little skeptical sometimes about what the information comes out. If the information or the sentiment out there, the understanding is it's terrible, and there's actually a crop there that's really advantageous for Russia. I'm not saying that's exactly what's happening, but from your contacts and people you're talking to, you're talking about like a national emergency. What are you hearing?
Well, I think everything you just said is what we're hearing. And I think you're exactly right to be skeptical of what you do hear from the government of Russia, the government of China, some of these official sources. What we're hearing from people on the ground is the Russian wheat crop is probably in the low 80s in terms of million tons. Still very much a moving target and still some weather problems there. The weather forecast looks quite hot and dry for some of the wheat areas into the mid half of June. So there should be continued crop stress. In terms of what that means, it means that Russia probably has about 10 million tons less wheat to export than we thought they were going to have 3 or 4 months ago. Probably, again, about 10 million less than last year. So what does this mean? It means that although Russia may be tempted to declare a national emergency and say no wheat exports, and they have the power to do that to some extent because it is quite a centralized planning structure, it is unlikely that Russia would do that unless things really go downhill from here, because one of the great successes, if you can call it that, of the Putin regime is that it has been able to move wheat onto the world market aggressively over the past couple of years, despite the US sanctions, despite the objections of many of Canada's allies. The Russians have been generating hard currency by trading their wheat. So if they choose to keep the wheat in-house, they forego that, which could create many other problems for the Russians.
We have KC wheat, mini wheat, and Chicago wheat. Are all three of those grouped the same from a fundamental perspective, or are any of them different? Just maybe hit on that.
Well, there are relationships between the wheats, but they're obviously distinct. The Minneapolis spring wheat is more related to the wheat we would grow in Western Canada. The soft red in Chicago is very much related to the wheat grown, say, in Ontario, where you have the winter wheat. And then the KC wheat is somewhat related to some of the wheats in Western Canada. I think the thing that, from a fundamental perspective, if you look at those three markets right now, what we're seeing is Chicago, which is the most liquid market in the world for wheat, which is where all the speculative money is. It ran up very much in April and May based on fund repositioning, based on some loss of acres for soft red winter in the US compared to last year, about 600,000, I think. So plenty of fundamental support, plenty of technical support. The other wheat markets rallied, but the Kansas City market actually is now facing imminent harvest pressure related to the US harvest. So US harvest is underway in Texas and places like that. It's spreading north. I think roughly 6% or something of the crop was off as of Sunday. So over the next few weeks, we're about to hit the full stride of the US harvest, starting in Kansas City futures, the hard red winter, and then eventually moving into soft red and later into the spring wheat.
What about the Western Canadian crop? We have a moisture situation's a lot better. Now, we're not out of the woods. I want to be, careful with sort of painting all of it with a big blanket, but probably a lot of analysts are looking into Western Canada and have been looking at some of the moisture that has happened and thinking, it's kind of similar probably to the U.S. corn crop in terms of the quality of what's going to be coming out of the ground. Is that fair?
Yeah, I think that's fair. I think both assessments are fair. I think when we sit back and we look at Western Canada, we want to be cautious, obviously, about penciling in a final yield. But the thing that we need to look at as of this moment is that the wheat crop in most parts of Western Canada is looking quite good in terms of being off to a good start. So that suggests that whatever your yield expectations were a couple months ago, we have no reason to doubt them. And if anything, they may be conservative based on the way things are trending with the crops. So we'll know a lot more once we get into, let's say, July with yields and so on. But right now, things are certainly off to a promising start. And I think also, if you look at somewhere like Ontario, for example, where we now have harvest less than a month away for soft red winter wheat, what we now see for Canadian farmers has been a very, very timely run-up in the wheat futures markets and the cash markets as well, because it does present this opportunity to look at some sales to manage what you talked about a little while ago, some risk, because you have this rally and we don't know what the outlook is. So there is an opportunity there for some sales.
Yeah. We're listening to Randolph Glanville of Grain Fox talking about the wheat and canola market. We've got more coming up here on Realag of the Weekend. Of course, we're on 980 CJME and 650 CKOM.
I'm Lindsay Smith from RealAgriculture.com. Join me Monday nights for The Agronomists, a 1-hour live and interactive show broadcast across YouTube, Facebook, and X. Monday nights at 8 p.m. Eastern, I host expert agronomists from all over the country to give you answers to some of the toughest agronomic questions. Join us live or catch the replay Tuesday morning. That's The Agronomist with me, Lindsay Smith, Monday nights live at 8 p.m. Eastern.
Hi, I'm Bernard Tobin, host of the Soybean School on RealAgriculture.com. Throughout the year, on the Soybean School, we'll bring you timely agronomic video content from planting to harvest, from the latest agronomic research to the latest in production technology. Check out our massive video library on YouTube, RealAgriculture.com, or download the audio podcast versions wherever you get your podcasts. The Soybean School is brought to you by BASF and Syngenta Canada.
We've been talking wheat and canola markets with Ranulph Glanville of Grain Fox. Here's the rest of the conversation. One of the things that's sort of trickled through my brain as I'm trying to get a handle on where we're at and not let emotion, come into play here. Should I feel good in my stomach about potentially being bullish wheat and bearish corn? Is that a safe place to be, Ranulph?
Well, I think in the very short term, that might be a bit of a crowded trade, as they say. A lot of people are quite bullish on wheat at the moment. If you look at a market like spring wheat futures, managed money funds have switched from being hugely short a few months ago to now being net long. So that doesn't mean anything other than a lot of people are starting to adopt a more bullish attitude towards the wheat market. Are there very real problems in Russia? Yes. Are the global ending stocks expected to tighten in 24, 25? Yes. But that doesn't mean the market is going to go straight up through the brunt of the US harvest in June. It might remove downside risk, no question, but I'd be a little cautious on the short-term outlook for wheat because some of the factors that I see as supportive, problems in Europe, like France has big problems with their wheat crop, problems in Russia, potential for downgrading of Ukraine. These are mid to long-term factors for the world market. So we want to balance our optimism about the mid to long-term outlook for wheat with a bit more of a cautious approach. And for corn, I think you can be negative about the short-term outlook, but we need to be aware that it's still June. So if you're going to take a bearish stance towards corn, you also run the risk that trade figuratively or literally works for a couple weeks, and then we get into July and suddenly the corn market snaps higher.
Yeah.
So I'd be, a little bit, I'd view that a bit as a trade from a few weeks ago when everybody was bullish, the wheat market and running prices higher and higher every day. Now things a little bit more calm, I would say, on the wheat front, at least relatively speaking.
How should the farmer that's in the, there's 20 million acres plus of canola, we haven't mentioned that crop yet. How do you view that market with all of this, crop starting to emerge, and how should we feel about it from a marketing perspective?
Well, I think the first thing from a marketing perspective, if you're a canola grower, you're probably feeling pretty good about your crop in terms of it's in the ground, it's looking pretty good at this stage of the year. So relative to some years, if you're talking specifically about Western Canada, you're probably feeling a lot more optimistic about your production profile. We did get a very nice rally in the canola futures market, which took the November future up very close to that round figure of $700. I think it got up to $696.20. And then we saw the selling come in on Monday of this week, which was a combination, I think, of spillover pressure from a big drop in crude oil. We got the funds selling canola. We probably had farmer targets getting hit just under 700. So in the very short term, the canola market has taken a hit. It is holding up relatively well compared to a lot of other oilseeds. That's something to take comfort in if you're a canola grower. So I think you're going to get more opportunities to sell. You still want to sell into rallies rather than throwing canola sales into breaks as the one we're seeing this week. But at Grain Fox, we're trying to balance the two. We've already advised selling some new crop canola, and then we're waiting for rallies. There's still a lot of weather-related uncertainty ahead, not only for the U.S. soybean crop, but also for the Canadian canola crop. And then we have many other things going on in Europe, which, lots of problems there too.
Yeah, absolutely. And like a crop like canola, similar to like when we talk about corn pollination, what's the temperature and what the conditions are, very similar to canola from a flowering perspective. We know that if we have intense high heat, and it's been cool across Western Canadian prairies, we are yet to really find true summer-like conditions for more than 3 days in a row. That's a factor that we still got to get through that piece of the growing season yet. So we are still very, very early. I think that's a great point. Hey, to wrap up here, one of the things we didn't mention was China or India. Of course, India, one of the big news items this week was the fact that Modi's not going to have a majority government. So that was kind of, and I would call that a shock for a lot of people who were following that election. There's been a lot of talk about China and some of their buying patterns of commodities, really focusing on Brazil and, of course, Argentina and not the United States. How do those two factor into this overall demand equation?
Well, I think China can basically be summed up as a country with a lot of potential. It has a big population. It has the potential to consume lots of food and other commodities, but which has generally been a disappointment post-COVID. And what I mean by that is the economic recovery in China after COVID has been very, very tepid, which means there's not a lot of incremental demand for anything right now. Perhaps the most telling thing about China is they're actually starting to export soybean meal because they don't need it to feed their hog herd right now. So this is actually quite a shift. And I would expect China to continue to import dribs and drabs of commodities in the year ahead, but no great boom for the agricultural markets. And for for India, I think really that is a pivotal country to watch if you're into the pulses and even if you're into things like wheat.
Yeah.
Because it does seem like regardless of which party is in power, India is going to need a lot of food. It has the world's largest population. It's expected to have a good monsoon season coming up, but that's not guaranteed. And they do seem to be short of some food staples. So I think that's one. Timing is always uncertain, but India remains sort of a reason for some optimism in some of these markets of interest to Canadians.
Well, Ranulph, I really, really do appreciate it. Great insights at a very, very important, critical time in the marketing season. So thanks for joining us here today on Realag Radio. All the best to you.
Pleasure to be here. Anytime.
That is Ranulph Glanville. He is with Grain Fox. Like I said, please check out Grain Fox. Great service. Encourage you to do that. If you look how the markets finished up to end the week, like spring wheat for September, 703.5, down 12 and 3/4. You look at hard red wheat for September, down to 679, down 13 cents on Friday. Chicago wheat September contract, 649.25, down 12.5. So pretty ugly way to finish the week. Hey, if you have any feedback on today's program, we'd love to hear from you. You can send me an email, shaney@realagriculture.com. You can also find Real Agriculture across all the social media platforms. And if you're, in the tractor on Monday night, one of the greatest sprayer activities you can do while you're ripping up and down the field is to watch The Agronomist. Real Ag in prime time, 8 o'clock Eastern, 7 o'clock Central on the Real Agriculture YouTube channel. Check it out, hosted by Lindsay Smith. You can also, if you have some feedback, you can call the Real Ag feedback line, 855-776-6147. Everybody have a great end to your weekend, and thanks for joining us here today on 650 CKOM 980 CGME.